All right, I want to introduce somebody. Jose, are you coming?
Oh, Jose. Yeah. Jose.
My zipper was down. I have to put a microphone on. Everybody, this is FX MVP. Is there anything you want to say?
Yeah, actually, I do want to say something. Let me put this down. If I can get everybody for just a moment to put both their hands in the air like this, both hands, and then just wave them from side to side. Promised my wife I'd shake each and every one of your hands, so I went ahead and did that, honey, just so you know. So, no, it's, I'm honored to be here. This is a big spectacle back at the headquarters. We're just in awe. Already see my man right there, Stuart, posing pictures on the atrium. Miss Jane, where's Miss Jane at? Miss Jane. So it's good to see everybody here. Big event. This is a great time to see and meet people, put a face to the name, and I just want to say thank you for your time, but most importantly in the webinars and the live presentations, thank you for your trust. I really appreciate that, and I appreciate the fact that all of you are striving for excellence. So thank you, and I'm honored to be here with each and every one of you. Thanks, Chief.
Speaking of trust, I've had about 3 or 4 people come up to me and say, you know, it's really good to come here because I really didn't think Peter Cook and Jason Stewart existed. I thought those were people you made up. And I said, let me tell you something. You can't make up 2 guys like that. Right? So, everyone else, come on out. Josh, are you coming out here? And
Yeah,
we've got Josh,
Martinez, of course.
Gary and Tyson and Abe. All right.
Who wants to head up to the microphone first? Come
Okay,
on
well,
back
wait a
here.
second. Before we do that, too,
sorry.
I got one.
Yeah, that's right. I forgot.
I want to do one other thing. How many traders have arrived at either the intermediate level or the level where you're consistently making money on a monthly basis? Can I see a raise of hands? All right, look around, everybody. These are the traders that have arrived to where they've stabilized and are consistently making money. Okay, can I see that again? All right, look around, everybody. Congratulations. Give me some numbers in pips. Just give me some numbers in pips. What are you consistently doing on a weekly basis? Give me a number. 1,200 pips. Look at that. What else? How much? 300? 1,000? 800? 200? 500? 1,600? Wow, look at even at 300, do you realize if you're trading at $10 a pip and you can consistently get to 300, you're at $3,000 a month, a week. So think about that. And so 2 lots, 6,000. We got to get you to that confidence level to where you can stabilize and you can get there. Does that make sense? Now, some of you are in disaster mode, right? All right. How many are losing 100 pips a month or more, or 200 pips a month or more? How many feel like, man, I'm in disaster mode and I need help? Okay. Those of you that are in disaster mode, I need total honesty with what we're going to do here. This book, The Forex Mindset, I wrote this during the biggest crisis of my life. I was married for 26 years. My wife left me after 26 years. It was a tough time. I'd been teaching mentorship to many of you, and all of a sudden it was kind of like, God, why are you now testing me with everything I have been teaching? And I literally thought, life goes on. Regardless of the disaster, life goes on. And this book was a godsend to me. It was very therapeutic to write this. And so I want to see disaster traders stand up. If you're a disaster trader, stand up. And don't be ashamed, because I used to be a disaster trader. All right. The first 25 disaster traders that make it up here, I've got signed copies that I want to give you, okay? Now I need I need you to say, Chief, I'm a disaster trader. And I need help. All right, look at this. All right, let's go. Let's give them out. And I need help. Casper, I need help. All right, wait. All right, I need help. Okay, Carlos. All right, Carlos, I got what you on there for you. All right. Okay, wait a second. I got another box back there that I brought. The box against the wall. I got one more box. Except this box I didn't sign. So make sure you come and see me before you go, and I'll sign it in your book for you. Those books were signed copies, so let me bring out another box of, here guys, help. Now before I give this set out, I want you all to listen to me that are up here. Did you see those raised hands of people that were in disaster mode? Trust me, they were there. Where they're at, you can be. Where you were at, they used to be. You understand that? So don't lose sight of that, okay? Don't lose sight of that. All right. Okay. Is that it? Was that it? All right. Well, okay, everybody. Thank you all for coming up here. Don't worry, don't give up. Do not give up.
As a matter of fact, if you're heading back and you want to get behind one of these microphones, it'd be a great time to ask your specific question to anyone on the panel. And again, we have these microphones on both sides. So, who wants to ask the first question? Don't let me do it. They don't want to hear my questions, I swear. They've heard too much of me already. Okay, here we go. Yes, sir. What's your name?
Osvaldo. Or Oz, easier.
Okay.
My question is regarding trend lines. I noticed that sometimes you use smart trend lines, other ones don't use smart trend lines. What's your take or your preference regarding that?
Okay, so hold on, don't move. So I want to repeat your question. Your question is, some of us use trend lines and some of us don't.
Smart trend lines.
Auto trend
on the
lines.
charting, yes.
Some of us use automation trend lines and some of us don't. Is that the question? And
Yeah.
And why do we do that? And why don't we do that?
For example, your example, I think of the GBP CAD or GBP Audi. You did the trend line yourself, not the automated one.
Correct. Okay, so for me, hand-drawn trend lines are a leading indicator. Hand-drawn trend lines allow you to identify the pinpoint accuracy of highs and lows, and then you can extend that level into where you can say, hey, in the future the market's going to go here, and you can foresee that, you can forecast that. And for me, when I look at the daily, monthly, 1 hour, I do a lot of that. I say, hey, I need the market to come to the back side of the trend line, because when I draw the hand-drawn trend line, that gives me the confidence on forecasting. Now, an automation trend line it requires the market to move to give you the data. And so usually when you first start learning to trade, you use, or you have a spatial intelligence lagging, or you haven't matured in that level yet, you use an automation trend line to help divide the market from a buy zone to a sell zone to build that confidence so you can apply the entry strategy. And so for me, I personally believe in my trading I have advanced above the automation trend lines until I prefer the hand-drawn trend lines, simply because it's more of a leading indicator.
I think there's an instructional value, especially in the beginning. Use the self-driven one, the manual one, then compare it to the smart one. Because if they're really close, you're on the right track. So you need to be able to be good enough that, in fact, you don't even need the auto. But the auto makes it quicker, but it also allows you to compare it to your own. So I think it has real good instructional value.
Yeah, I think Josh hit it on the nail right there. I think it's a good starting point, but once you become better at drawing trend lines, you may find that you can place it on your own.
I agree. Classic test. Okay, or a question over on this side, man, if you want to come on up to the microphone.
Wait, what I was
Oh, I'm sorry.
Well, what I was trying to do Can you guys turn my mic on back there? Okay, what I was trying to do is find, and Josh, if you can find a currency pair, there's several reasons why I draw a trend line. The most important reason is if I've drawn a down trend line, for example, as long as the market is behind or below that trend line, I really need to be thinking bearish, right? But just because the market breaks a trend line doesn't mean the trend is over, because there still could be Fibonacci levels that the market could rally, break the trend line, and hold, and then continue to bounce. And continue to go in the direction. You got that so far, everybody? So I want to look at a candlestick formation at the backside of the trend line. Now, whenever a trend line is broken, the first thing I'm looking for is to see if there's a reason from a larger time frame that it's been broken. Did we hit a D at a larger time frame, and should we be breaking the trend line because the larger time frame controls the smaller time frame? So did we hit the D? Should we be breaking the trend line? Yes. Should we be crowning? Yes. Should the market be coming back to the 382 on the larger time frame? Yes. But the question is, if the market breaks the trend line, then the first thing I'm looking for is, here's the downtrend line, if the market breaks that trend line and comes back down to the trend line and forms a bullish candlestick formation. Look at this right here. It forms a bullish candlestick formation at the back side of the trend line, right there. You all see that, everybody? At the back side of the trend line. See, now, when the market breaks the trend line, if it's meant to continue to go down, it will start to go down and take out the low without forming a bullish candlestick formation. But if it forms a bullish candlestick formation at the back side of the trend line right there, you got to take the trade. That's the biggest sign that the market's going to reverse. Maybe even a temporary reversal, but you got to take that trade. That's why I draw trend lines. As long as the market is staying below the downtrend line, it's remaining in a downtrend. As long as it's staying above the trend line, it's remaining in an uptrend. But if it breaks it, once again, if it breaks it, and it's not breaking it at a D, let's just say a D extension, or at a 127 when it did not hit the 382, and we're in a retracement zone, then if it breaks it, once again, I'm going to tell you, the key is if it breaks it, because the crown is the 1, 2, 3, 4, 5, right? 1 breaks the trend line. 2 needs to come up to resistance. It doesn't come up to resistance right there. So since it broke the trend line, it could hold here and it could just keep on going down, right? But once again, if it breaks the trend line, comes back down, forms a bullish candlestick formation at the backside in a downtrend, or a bearish on uptrend that's been broken, you got to take the trade. So that's the biggest sign that you're going to get, whether it's a permanent reversal or a temporary reversal. So look for those, okay? All right.
Thank you, Chief. We have another question over here. Ma'am, can you give us your name and then your question?
Hello, my name is Vonda Hargrove, and hi, Chief.
Okay.
And I have a more macro question for Abe and possibly the rest of you guys. For about 5 or 6 years, the World Money Trade Show has been held at this hotel, and I've been able to visit it several times. And about 5 or 6 years ago, there was a mere utterance that the U.S. dollar would be replaced as the world reserve currency. And as we see, that is happening as we go along here. I'd like to know your take on what that's going to mean for the U.S. dollar and other currencies going forward.
Okay, thank you very much for the question. Let me give you a point of view here to consider how you look at that issue. What does it mean to be the world reserve currency? It means that about 80% of the world's transactions, anything that happens in the world, is priced in the U.S. dollar. It's pretty significant. It's about now 60% reserves of the central banks on U.S. dollar. So this is a very decades-long issue. The US dollar is not being replaced. It is certainly being challenged by potential Chinese now as part of a reserve currency in the world, a very small percentage, but it is not going to affect, it's not actionable for you traders today or even the next year. It's a macro, very macro condition. Now, so the answer on that is don't worry about it. It's not an issue for traders. The second is that the US dollar climate is a function of expectations of interest rates. If US interest rates are expected to go up, it will get a lift from it. Now, this week will be important because there'll be a statement on it, I think, tomorrow. And then June again. So you watch those things, and those are things that give a lift to a currency. So the answer is, don't worry about US dollar status as a reserve currency. Our grandchildren will have to worry about it. And the US dollar's climate is tentatively bullish, but that's tentatively right now. I hope that answers your question. Actionability, don't worry about it.
Thank you very much, Abe. We appreciate that.
No comment.
You know what, in lieu of time, let's just, if you don't have an answer, we'll just keep going on to our next question from the crowd, okay? Sir, over on this side, your name, please, and your question.
Blake, Josh and Tyson, in some of your webinars, we see you indicate that we should wait for retracement before getting into the trade. And many times it doesn't do the retracement. We just not worry about it. And in fact, it's one of those trades you miss, or do you, what might we do? Particularly when you see it tends to be bullish into a direction.
Okay, so the question is, when we use a counter trend line break to enter into the market, why does sometimes we just say, hey, this counter trend line break is good enough, and versus sometimes we say we need a test? Is that correct? Okay, I would like to provide a demonstration onto the charting software to illustrate the reason why it should take me 2 minutes, if that's plausible. But it takes Chief to get up.
That's going to take 2 minutes.
All right, so usually when a trend is fresh, you're going to have the market being crystal clear. It's going to be clean. It's going to be, hey, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, and that's beautiful. And you bring in counter trend lines, and they're just fantastic. It's just, hey, beautiful, 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 right? Perfect, perfect, perfect. That's usually when the trend is fresh. It's the baby trend. It's, you know, the extensions are, you know, 60 pips, and the retracement's like 30 pips. You know, the extensions, it's not a big gap. But when the trend matures or becomes larger than like 100, 200, 300 pips, you begin to see more of a structure like this, where you see higher highs and higher lows, and then you see lower lows and lower highs, and then higher highs and higher lows, and then you see lower lows and lower highs. And basically, we're doing the same exact thing where the market is making higher highs and higher lows, higher highs, higher lows, higher highs. But the distance of these pushes are like 300 pips, 400 pips, and the retracements are like 150 pips. And so the issue that comes into is, hey Josh, you know, when you say buy this counter trend line, and I come over here and I do this, and you tell me, hey, that's not good, that's not right, you gotta wait for the test. A lot of it has to do with, and I'll clean this up, has to do with when the market is making higher highs and higher lows, higher highs and higher lows, and then the swings become larger, and then I see this, and I say, hey, you know, we're at the uptrend line, we're at the uptrend line, we gotta start looking for the reversal. I'll get rid of that. We're at the uptrend line, start looking for the reversal. We are not allowed to do this. You can't do that because this is now a mature trend and you have additional waves, and so you need trust in your entry. And what that means is you need to bring in your counter trend line, and what you're trying to avoid is you're trying to avoid this disaster from happening. How many of you have seen that? Traded a false trend line break, lost money. So you need proof. You need trustworthiness, and how you get that is say, hey, you know, I'm going to respect the fact that we're going down, and granted, we're at the subtrend line, and granted, hey, we may still push bullish, but this is what I need. I need the market to come down, test the backside of that trend line, and then test. And it only happens, and I only come on there and I say, we got to wait for the test, is when the retracement shows multiple waves, and to where I need a little bit more of a before I get my money behind it.
Josh? Okay. I was thinking more in terms of the start of the wave up, when there's been a consolidation at the bottom of the curve and starts up, and often one or two candles are positive, and then you sometimes you say, I think you should wait for retracement and then go up, and often it doesn't do that retracement. It continues going up. It's really early on in that.
Oh, that's simple. You should have just asked that the first time.
Sorry.
All right. So, when the market breaks your trend line and the trend line's fresh, like so, what I do is I ask myself, how far is that push? Because the last thing I want to do is buy high, right? I don't want to buy high. I want to buy low. And I think the market's going to reverse. If the market's like this, I don't want to buy high. It's too high. I need a retracement and then the test. But if the trend is like, it's very, very steep, and then you got a little bit of consolidation, and then you get something like this, because you had your original down push, then you had your sideways movement, and then you're kind of like, hey, we have an established level of support, and if the market breaks that, right there, it's kind of like, hey, I'm buying low, so let's just buy. Does that make sense? And so, to me, when I look at it and I say, I need a test that has everything to do with proof, and has everything to do with staying disciplined and buying low and selling high. And if the break is a high price, and because it's a bullish reversal, then I gotta wait for a low price. But if the break is still at low price, heck, let's buy low. That's what we're here to do, buy low, sell high.
Yeah, I want to answer that question with this. Remember yesterday we talked about the stochastics? And so, if it breaks that trend line, and the stochastic on the larger time frame is bullish and it broke a downtrend trend line, and if I heard your correction correctly, and you got to remember I'm older, but if I heard your question correctly, you said sometimes it doesn't pull back because it only comes back to 382 or 50 and then it takes off and I don't get in. That's one of the main reasons why I pay attention to the stochastic, because the stochastic, Josh doesn't pay attention to the stochastic. That doesn't mean I'm right and he's wrong. It just means we're different. And what works for him works for him. What works for me works for me. Just like I don't trade the same way as MVP or Tyson or anybody else up here. But when a trend line's broken, and I talked about this yesterday, I told you that over the last year I've really learned this, to pay attention to the stochastic on the larger time frame. Because if it breaks a downtrend line and the stochastics are still going down, there's a higher probability it's going to break that trend line and keep falling down. But if it breaks a downtrend line and the stochastic on the larger time frame is up like this, then there's a higher probability it's going to break that trend line and only have a shallow retracement to a 382 or 50. And it's at the 382 or 50, you need to be buying a 1, 2, 3. Remember that? Okay, so.
Thank you, Chief. Experts. Looks like we have the Supreme Court of Forex up here. I'm going to ask you, if possible, we can keep our answers quick, and especially when we have a lot of people who are looking to ask questions. And ma'am, you are next. Give us your name and your question.
Hi, I'm Donna Straker, and mine is more of a general question. Is from talking to a lot of people that I've had the privilege to meet here, for those of us that are relatively newbie and with small accounts who are on our way to being disasters, as the chief says, like some of us have bought a lot of courses, and I'm glad to see that you've now sort of laid out a roadmap for the progression that people should take. But my question is that for those if you could only do one course after you've gone through the UTP, what one would you do? Which one would you recommend?
I think Gary's going to say Wave. I think Abe will say Market Forces. I might say Target.
My short answer to that is what I learned from the chief. Many years ago when I joined MTI, the goal was to make 20 to 25 pips a day. And I thought to myself, man, 100 pips a week, 40 pips a month, that's great. That was what I strived for also. And then he introduced me to basket trading. And when I went the route of basket trading, it was no longer 20 to 25 pips. It was 500 to 1,000 a week. So it's just, if you can learn that basket trading skill, I mean, and know which way the currencies are going together and opposite, the sky's the limit. And as far as risk management, trade smaller lot sizes till you get it, but it's just fantastic.
My general perspective is that the evolution of the trader is sort of a trader fitness landscape. Conditions change, markets change, fear changes. So you have to be a fit trader. That means cross-training is important. Because if you only do one thing and then it doesn't work anymore, you're going to have a gap in your fitness level and you won't survive. Natural selection means the trader that survives the longest has a fitness that is overall multiple strategies. So I'm not going to tell you you have to take mine. I'm going to tell you you have to think about your fitness level. What difference does it make to you? That's how you decide on a course.
Okay, so I get this question a lot. And the question is what you just asked is, hey, I can only do one thing. What is that going to be? To sit here and ask all these gentlemen who are extreme experts what they're going to suggest for you to do is kind of an open-ended question, almost like a loaded gun, and you're saying, hey, catch. And what I mean by that is you as an individual, you have to ask yourself how much time do you have to dedicate towards trading? How much work do you want to apply towards trading? How much risk do you want to have per trade? How much reward? And how much money do you want to make? How many pips you want to make on a monthly basis based upon your ability and your effort? Now, based upon your goals and what you can do will be much different than what you want to do. And then you as an individual need to tell your account executives and say, this is what I can do, and this is what I want to make. And it's going to be their job to say to you, based upon what you want and based upon what you can afford in time, this will best fit you. And then it's up to you to say yes or no.
Can I say something? You should have shaved last time.
Should have had me working 15 hours a day.
Where are you? You're sitting right there. She also found a diamond pennant. So stand up again so everybody can see. If you've lost a diamond pennant, go see her. And all you desperate traders that were up there, go see her. It says you'll have to describe it to her, but she found a diamond pennant. I guess if nobody claims that you really pay for your trip with that diamond pennant. Okay.
Okay, let's bring it over to this side.
Wait a second, I want to answer. I think you should join the new Elite Trading Club. The new Elite Trading Club, if you're struggling with that, if you only have one course you can buy, join the Elite because you're going to have 1 week with me, 1 week with Josh, 1 week with Tyson, 1 week with Tad, and that'll give you a flavor of what your personality style is like. So then from there you can pick. Our goal is to try to get you consistently making some profit. So, go ahead.
Excellent. Thank you, Chief. Sir, if you give us your name and your question for the panel.
My name's Clyde Roberts. I think the experts there overlooked one little thing in answering that lady's question. The size of the account has a lot to do with it. I joined the Elite Clearing Club one time and found out that most of the trading was in something that I couldn't trade because I didn't have enough account. So that's not a question though. I want to know what drives this stochastic. Is it a calculation based on previous trading, or what makes it move?
What drives the stock? What drives it is the internet, and you'll have to talk to Al Gore about that. So, I don't know what drives it. It's just all I know is when it's at the bottom, I need to be looking to buy. When it's at the top, I need to be looking to sell. And it's an indicator you trust. Okay, so you can reach Al Gore, I created the internet.com.
I know his, what was his brother-in-law?
No,
I'll ask it, maybe I can get to him.
Okay. No, in all fairness, the stochastic is really, it's a stochastic RSI. And we had to play with the settings for a long time to try to get it to match wave movement. But it really is price movement against time. Because prices can only move so much in a certain time, and then traders get nervous. And that's what creates support. You know, prices come down, and then all of a sudden bulls want to come in and support the price. Usually, when it's moved a certain amount of price in time, that stochastic usually goes from the peak to the valley, and so then it's time to be buying. But then when it goes from the valley to the peak, and bulls have been buying, then traders get nervous. They don't want to buy anymore. And so it creates resistance because they resist buying. So then it comes back down. So.
All right. Thank you very much. Now we're back over on this side again. Ma'am, give us your name and your question.
Yes, Eileen Townsend. I don't know if you've analyzed this or not, but in fundamentals, when it goes way down, how long is an average does it take to come back up?
And the mic goes to you.
I really love that question because it has so many layers of reality in it. The speed, this is something we'll discuss in detail, but the way you think of that, it depends on the shock wave. You have to, it's very similar to chemistry. There's a wave, there's a drop of the market, there's a shock, there's a reaction. Now, if it's a very fast reaction, it's usually very intermittent, like the Paris terrorist attack. Very fast, why? Because psychologically, the big money has to move on the sidelines, but then the event is a short-term event. So it's the cause will tell you that. Now, if it's a shock wave like the Shanghai market selling off, it's going to move down, not in a spike, but in a parabolic shape down, which is a certain curve. And the speed there, it's going to take a long time to come back. So the length, the duration of the move is a function of the intensity of the shock. That's chemistry. So think of it like a drop, a stone in a lake. You know, a small little stone, little ripple. A large stone, large ripple. That's my best answer right now. But you got an insight of the question into how to look at a price as a composite of a psychological wave. Thank you.
Thank you very much. Let's bring it over to this side again. Oh, I'm sorry. Was there a follow-up? No? Okay, ma'am, why don't you go ahead with your question? What's your name, too, first?
Trish Walker. This is a question from my husband who's been watching online the last couple days. And he wants to know, has anyone considered what will happen to the Forex if the world moves to a global standard currency, which would be going one step further from the U.S. as being the currency of choice? I think he was directing it to Abe. He believes that this is a very real potential according to the IMF, and that it may be closer than we think. It's not so far away as what we might think it might be. How might we gear up for it? And also, since you're all on the stage, Lloyd wanted you all to know that he's been doing screen grabs, and he can do new Photoshop pictures, and there'll be new band pics soon.
Okay.
Quite a question.
There are a lot of layers here. Let me just say, I'm very familiar with the political philosophy that the world is going to, either the fiat currencies are going to collapse, you're going to have one currency, or it's going to be replaced by gold, or you have cryptocurrencies, which Bitcoin and things like that. The idea here is that it's not going to happen the way you think it's going to happen. Sovereignty is not going to be given up by China. It's not going to be given up by Russia. It's not going to be given up by the United States. Maybe, so the idea is that you're not going to have a one world currency. Countries don't want to lose their sovereignty and control over their destiny. That's why some currencies don't even float. So the idea here is to be prepared for it. I'll tell you what, own something that has tangible goods. Own some timber, own some gold, own some things that they can't take from you. But that's a political response, and I think it really is beyond the need for you to worry about becoming a better trader.
Thank you very much. We'll go over this. I'm going to help try to get everyone through their questions here. Sir, what is your question? And give us your name, too, please.
My name is Jeremy Cable. And pardon my voice, I just got sick recently, so I'm a little hoarse. One of the questions that I've had, and I've attempted to ask it a couple times in some of the online analysis and stuff, but I've noticed, particularly with Tyson, if I recall, that at times when you're going through the analysis and then you're looking at it for an entry point and you measure the distance from the entry to where the stop would be, that it ends up being too large, and you say, okay, this was not worth the risk, unless of course you want to move your limit up to here, and then then it would be worth it. And it always kind of confused me because is the limit so arbitrary that you can just move it like that to make your stop loss? And so it always kind of confused me. How can you justify just simply moving the stop or moving the limit just so that you have a 1 to 3 risk to reward?
That's a great question. I don't remember doing that. Maybe I have. Typically, my targets are based on technical setups.
It may have been somebody different. I just simply switched the names.
Yeah.
But I've seen it happen repeatedly with 1 or 2 different people. So I always tried to ask them, and I just never got an answer.
It was Tyson. He does stuff like
that. So I will answer that. I'm a big believer in there being absolute technical reasons for everything, for stops and targets, and I try to be as detailed on those as I possibly can. So, yeah, I guess I can't answer.
I'll give you a good a way to think. If you hear of a great opportunity by any of these guys, even me, and it requires a huge stop, what's the solution, everybody? Lower your lot size, that's one. What's the other one? What is it? What? Change your lot size. What else? Don't trade it. What else?
Smaller time frame.
Smaller time frame. What else? I'm looking for one thing. What else?
Wait.
Look for a 1, 2, 3. Because a 1, 2, 3 solves the equity management issue. If it's meant to go, that 1, 2, 3 will hold. If it's not meant to go, it'll still retrace deeper, and at least you'll take a small loss. And I can put up with a lot of 30 to 60 pip losses. But man, those big 300 pip losses, 350 pips, those are tough. Unless, like Stuart said, he says, I don't mind 150 pip stop loss but I need to be going for 450. So the answer to your question is, if you see the opportunity, but you can't see yourself exposing that much equity, look for a 1, 2, 3. Okay?
Thank you very much. I actually have a question now from our online members. So this is a question from FX Soldier. It's for Josh. Josh wants to know, at what point in your Forex journey did you decide to try your own style? For example, I noticed you don't look at the weekly charts or use stochastic. We heard that a little while ago. When did that happen?
Okay, so the question was, when did I say, okay, I'm going to develop and create my own style of trading? And it's been a continuation of a growth pattern. It wasn't just one day of it. It was just more me going through and saying, well, that doesn't work, so that doesn't work, and this isn't working. And me saying, okay, well, this is working, well, this is working, and trying to put everything to make sense. And what I mean by that is my strategy came from my questions not being answered. And I would have great questions as to, well, why does this do this? Why does this do this? Why does it do this? And Jared would help me, no doubt about it. The FX chief would assist me. But he would explain it into a manner to where my brain would hurt. So he was answering.
Now, I'm going to tell you the truth, what happened. Here's the real truth. I said, Josh, you either trade my way or move out of the house. And he moved out of the house and did his own thing.
I would apply the strategy. I would ask my questions. I would get the answer, but the answer didn't make sense to me. And so I said, well, eventually, if I did it like this, and if I explain it like this, it makes more sense. And it's just more one of those things of, oh, I got this aha moment, and then I got this aha moment, and I got this aha moment. But I didn't just say, hey, I'm going to do this. It was A/B testing. And the A/B testing is such a patient, emotional, draining, but needed thing for traders. You take your strategy, you follow the rules, 50 trades, and then you say yay or nay. And if it's good, you stick with it. You want to make it better? You follow your original strategy, strategy A, then you bring in strategy B and say, hey, it looks like if I would have done this or this, I could have made more money. Strategy B is making those tweaks. You're still making your money with strategy A, but strategy B is like a demo account or something, 50 trades side-by-side comparison. If strategy B works better, and you stick with strategy B, that becomes A, and you keep that evolution going. And so it wasn't an overnight thing. It was more of an A/B testing style, and of course, having Chief hear my brain along the way. So,
thank you very much, Josh. We're going to go over this side again. Sir, your name and your question, please.
Good afternoon. My name is Edwin, and my question is directed to Abe. Based on not only that China is devaluating the yen, and small GDP growth not only in China but all around the world, do we expect a rally on the dollar? That's my first question. And my second question is, based on the rumor that negative interest is going around the world, do you think it's something that's going to affect the United States as well, the dollar?
He's hard of hearing.
Did you hear the Chinese one?
All right.
Okay.
Repeat his question.
Yeah, I think there are three questions in there. One is the effect of the Chinese devaluation on markets.
Yes.
Okay. Second is negative interest rates.
Yes, that's going to affect the United States.
Yes.
The
Okay.
dollar.
Okay.
And the small GDP all around the world. Not only the small GDP growth.
Okay. I understand. Okay. Let's start. The way to understand the yuan, it's called the yuan or RMB, you don't have to worry that much about it, except that it's important. The Chinese won't float, like the US dollar trading against the euro, other currencies. It's not a floating currency. It's pegged to a basket. They released the peg and the market really took it down. The reason it's important is that it shows lack of confidence in the Chinese government to grow their economy. Because if they had to lower it, it shows they had fear that they're not stimulating enough, and they're a very big export economy. So to understand that the U.S. is an amazing country, 80% is consumer driven. We don't need the rest of the world. We're very small exports. So the effect of devaluation is a fear effect. It's how fast it happens. Anything slow doesn't disrupt. It's that shock wave. If it's a big shock, it scares people. If it's slowly done, it's not that bad. Number two is global growth. Here's the thing. The U.S. now is saying, this is very important for you to understand, that the central bank in the United States is saying Monetary policy in the United States depends on world conditions. That didn't happen before. They are saying we're going to wait to see, we're worried about world conditions. So there's a risk factor. And that's so amazing. Our interest rates didn't go up because they were worried about global growth. So slow global growth is not positive for U.S. growth either. So it's all tied together. Negative interest rates. I'm not going to get into a big detail. But, well, why are they doing that? Why, in effect, are people going to a bank and get charged to put their money in the bank, in a way? And why are banks now being penalized to keep capital? The reason is they want to stimulate lending. Here's the problem. It's not just money, it's lending. Just want to give you one point of view. Don't think of it as printing money. It's how much money gets into the economy. And that's private money. That's bank money. Banks need to lend more. And in Europe, they need to stimulate lending, and they need, and in Japan. So negative interest rates are scary because it's almost like a last resort. So it shows how weak it is. So that's what we're going to be following. In the U.S., they're not going to do it for quite a while unless we have to do it. Let me give you another point I want to make for the former question. Look at Europe, 19 Eurozone. They're having a hard time with one currency because Greece and Spain and Italy, their economies are mismanaged and everybody else is paying for it. So one world currency cannot happen without revolution and civil war. It's not going to happen. Nobody's going to give up their rights to their own country's economic destiny. So the answer to your question is yes, world conditions create patterns in markets. It's called risk aversion and risk appetite. Aversion meaning let's not go. So when the U.S. stock market starts selling off, you will learn what currency to trade. Thank you for that question. I really appreciate it.
We still have 2 more questions over here. Ma'am, if you will give us your name and your question.
Joanne Norgard, and I forgot my question now. No, I'm like kidding. I wanted to ask about the expert workspaces because I see Gary's, but I don't see anybody else's. And with the Chiefs, with the Elite Club, I thought that everybody after their week was going to continue their workspaces.
Currently, I'm running a test at the moment right now with the expert workspaces, so my wave account traders do get access to that. But it's only a test and trial period, and will eventually be rolling out, yeah.
How about the Elite Club, though?
So I've set the expectation for my week that I will continue to update my workspaces every day. So what I will do is I will email to the tech department my updates every day, whether it's my week or not. Now, that doesn't mean that these guys are going to do the same thing, but I will do that.
I like to make decisions right away. So let me see if I understand you. You're saying that whoever the presenter is, you would like to have access to their workspaces. Right. Okay, we can make that happen. We'll make that happen. Okay, so yeah, so that this way, if Gary's presenting, you get his workspaces. I don't know where you're going to put them on your machine, but I mean, you'll get them. If Tyson's doing it, you'll get them. If Josh is doing it, you'll get them. If I'm doing it, you'll get them. Okay?
Does that mean like the following weeks? So somebody else is now presenting, but
give us like a 9-month window to get them to you. I didn't say when. No, I mean, just you should be able to get them momentarily. I mean, usually when you're done, you're done. If you post them. Yeah, it's a direct connect link.
Right, the expert workspaces.
We'll get on top of that.
Yeah. Just so that everyone knows, the expert workspaces are when I update and I upload, you'll actually get a confirmation that the workspace has been uploaded. So yes, I know what you're doing, and yeah, we can get it done.
We'll get on top of that.
Let me just say that the reason why I'm willing to do it is because I'm in Minnesota in front of my screens all the time, constantly. These guys are at the home office with 200 plus employees, and they're running around doing other things. So there's no excuses for me not to update them and keep you guys informed of what's going on. So.
Okay. Great question. Great.
Thank you very much. Thank you for your question, ma'am. Over on this side, sir, your name and your question.
Yeah, my name is Burton from Bermuda. The MTI has so many courses that to me it becomes overwhelming. You have the swing, you have a target. I've learned that the pattern is ABCD. Now I have the wave chord, which is ABCDEFGH. So I'm trying to figure out, is there a correlation between how these different courses fit into the wave pattern, or does the wave pattern override some of the technical components of those courses?
You know, I think that's a really great question, and I'm sure, I shouldn't say I'm sure, I would think that a lot of you would think, well, MTI just creates new courses so that they can drive new revenue. Now, no doubt we got to make a profit, but I guess where I come from is because I interact with so many of you, we try real hard to listen to what you're saying. And I'm really clear that there's a lot of different personalities in this room. I mean, there's very patient people in this room. There's very impatient people in this room. There's very happy people in this room. There's very anxious people in this room. There's very bored people in this room. And so what happens is, I don't know what your personality style is, but I do know that, like, for anxious people who walk around with a lot of anxiety and they have a need to do things now, I need to do it now, you need to take the scalping course, okay? And for people that are real patient, you need to take the swing traders course. And for people that are really greedy and they need to make a lot of money right now, you need to take the basket trading course, okay? So we have all these different courses because the truth of the matter is there's probably 1,000 very productive ways to extract money from the market. But you've got to match the way your personality is with the way you trade. Because if you're a really patient guy, you're not going to get into scalping. And if you're a really anxious guy where you need that instant gratification right now instead of delayed gratification, you know, you're not going to be very happy swing trading and be in a trade for 5 days. Does that make sense? So what you have to do is you have to align your personality with what we have to offer. And you know, you have to go through a few courses to see what it is. And that's why we changed the elite room. Because, you know, this is for the last 7 months, you've been there with me. This is the way Chief trades. You know, I've received a lot of emails that said, I really don't like the way you trade, Chief. And I'm okay with that. You know, but I love you too. But, you know, and I'm okay with that. So I do know the rule number one for failure is to try to please everybody. We can't please everybody, but we do listen to everybody. Okay? So.
Thank you, sir. We're going to head into the speed round of our questioning now. We're going to ask you to keep the questions and answers to a minimum. We want to make sure we have time for everything else we have planned for today. And we'll go right here, sir. Your name and your question.
So, Jason Stewart, what would you say will take preference? So, for instance, if all the NPs right now are at downtrend lines showing various formations technically, but you all expect the yen to weaken, so that means we should be expecting it to go up, right? So even so, I understand that the technicals may be short-term to maybe form right tip of the crowns for some of them. What we all say takes preference?
I think your question was if you expect dollar yen to weaken, what's the technical strategy that matches it?
No, not dollar yen alone. Across the board right now, the yen pairs are at resistance, maybe just short term to continue to go bullish, right? So technically, we might be looking to sell the yen pairs. So the Aussie yen, we might be looking to sell because it's out of downtrend line. But we're expecting fundamentally the yen to push the pairs up. Okay. So what you always say take preference?
Let me give you, 2 weeks ago, Chief, we had that issue. We had a technical pattern that's an AB wave with an extension to D wave on the downside on the dollar yen. Fundamentally, I had seen that be careful on that. So I would issue a cautious, you follow the technical strategy with a cautious approach. And this way, you are very aware that the likelihood of that strategy may be following some hurdles. It's the weather forecast. You got the strategy matches, the technical strategy is aware of the fundamental strategy. So you have a cautious selling or cautious buying. So there'll be times that technicals are never trumped but they're modified in terms of your caution or the weight you give it. That's my best approach.
I think the greatest thing Abe said to me was this: Chief, MTI has built the best technical car in the world, but sometimes you get caught up in weather that you don't know about. And when he said that to me, man, I was just like, no kidding. He said, I want you to think about something. You got planned to go from Orlando to Atlanta and you want to travel at 90 miles an hour. That was your expectation. But along the way, you ran into a snow blizzard. If you stay the course at 90 miles an hour, you're probably going to trash that car and get hurt. And so when he said that to me, he says, I really believe the ultimate trading is all about matching technicals with the world fundamentals. And you all know that in the last couple months, as Abe and I have worked together, things have changed. I think that's real critical. I've learned something very valuable here. So,
and we're going to get to the actionability. What difference does it make to you? How much you put on? Do you leg in? Do you leg out? Do you switch your strategy to a 1, 2, 3 versus a extension D? These are issues that will be brought out. But your thinking is correct. What do you do when the fundamentals don't match? You have to be cautious about it. Thank you very much.
Thank you. If you're in line right now for a question, we will answer your questions, but I'm asking for no one else to come up so we can end close to time. And your name and your question, please.
I'm Lynn Douglas, and I have a really basic newbie question. It's about equity management. So we're told never to risk more than 1 or 2% of our account. Now, do you mean 1 or 2% on any one trade, or 1 or 2% altogether?
Altogether. I think, you know, the goal here is to survive during your learning curve. You know, once you go through your learning curve, I think you would know when you can risk a little bit more. I would be a liar if I said I didn't risk more than even 5% there. But I want to tell you the situation. Josh knows about this. Last year, I risked 10% of my trading account. I lost. That hurt bad. So,
this is a per trade, correct?
Well, I was in on, this was all my trades going. You know, what you want to do is if everything loses, you don't want to be down 50%. If everything loses in a 24-hour period or a 2-day period, you only want to lose 2 or 3% max. You need survivability because, you know, as a new trader, you're dealing with your emotions too. So you've got to not only recover from the financial scar, you've got to recover from the emotional scar. Because now you introduce the fear and anxiety over your next trade.
This will be the last question here. Just remind everyone, we are having another cocktail hour this evening. You'll have a chance to meet everyone and ask your questions there. Plus, all of these guys have email, and they're available online all the time for your questions. I know they're always happy to give you any answers you need. Sir, please go ahead.
I have one small question that may be to the Chief or Josh. You all send us the elite charts most of the time anyway. But the stochastic that I get has a daily wave and a weekly wave. And I have never been able to duplicate that on my charts that I create. I can do the daily by using the MTI stochastic RSI. And there's another one that's just plain stochastic RSI. Is that a technical question I should be asking?
Who's dealing with that problem? Anybody dealing with that problem of duplicating the stochastic RSI? Okay, it's real critical, Sal. You and, give me your name? You and Debbie get together with your account rep and let's get that problem solved. That's a no-brainer. And all of you look at Sal. I had dinner with him last night. He's a cheap date if you want to take him to dinner. He doesn't eat much. So, I enjoyed it last night, Sal. All right, guys. Are you having fun? Absolutely. All right. Who do you want to go on another trip with the chief? Do you want to have a lot of fun on this trip? Okay, we were talking about this in the back. I said, would you like to attend Chief's next birthday party? Okay. Would you like to attend another event like this, but even better? Okay, so for everybody that would like to attend another event like this, my birthday is late August, so we decided to have another event in September like this, but even better, because we learned a lot from this event. At this event, we're going to also celebrate my birthday party. So we learned a lot from this event, and one of the things we learned is that in order to pull off something better, we're going to have to charge more. However, I said, look, I would like everybody to come back to this event and attend my birthday party. So for everybody here that would like to attend the next event and lock in your price at the same price you paid for this event, whether it's the VIP price or just the general admission price, then I want you to all stand up to come to the next event, that would like to come to the next event. And I got this idea from Josh. Josh seemed to do better than me. I was watching Josh in the back and I said, well, that's a pretty good idea, you know. So, come on, you can't let Josh do this. So for those of you that would like to attend my birthday party in September, come on, it's my birthday, man. Come on. Follow me back to this account and let's talk to our account reps. Josh, am I doing this right? Am I doing this right? Okay, just follow the chief. Okay, come on back here and sign up so you get pre-registered and lock in your price for the next event. Okay, lock in your price. Talk to your account rep and lock in your price for the next event. Okay? What you should really do, Chief, is bring it to